Overcomplicating your trading strategy does not guarantee that you make the most money in the foreign exchange market, and that is why we still have traders that are struggling with analysis paralysis and they are not profitable yet. In today's video, we are going to level out all the cracks and noises in technical analysis that leads to analysis paralysis, and you get to understand how to carry out technical analysis in simple and basic terms. I'll teach you the most basic yet super effective form of technical analysis, and by the end of this video, you should know how to make money in Forex without overcomplicating your analysis. If this is your first time visiting our channel, please hit that subscribe button and turn on notification, and do not forget to give this video a thumbs up. Few years ago, I was always battling with analysis paralysis, and that was because I was trying to incorporate all I had learned about technical analysis on the chart on that particular pair I was about to trade. And at the end of the day, I still take a loss on the trade or just get super confused and frustrated and ended up not taking a trade, all because I was trying to put so many moving parts in taking just one trade on one particular pair. But all that changed when I decided to cut out all the big and complex concepts and just focus on the root basics of technical analysis. And now I am 100% profitable and I trade with so much ease and less complication. And so in this video today, I'm also going to show you how you can do the same thing and replicate the same result as I did by not overcomplicating your trading strategy. But please do note that there are some other concepts you need to be aware of and you need to have an understanding about so that you can make the best use and fully utilize what I will be sharing with you today in this video. This concept has been fully covered in our premium VIP courses, so I suggest that if you want to get to know these concepts and make the best use of them, I suggest you use the link in the description below. Click on that link, head to our website, get the courses, and you'll be able to replicate the same result as I did using the same concepts. Now, if you're someone who is just starting out in the foreign exchange market, we have an amazing package for you. It is a 5-day free training bootcamp for you, so you can use the link in the description below. Register, sign up so that you will not miss out on the important informations that are being delivered in this 5-day free training program. So if you're just starting out, if this is your first time trading foreign exchange market and you want to get along, or if you have been trading for some while and you still need some information about the financial market on how to get by, how to become consistent, how to be profitable, then I suggest you go on, use the link in the description, register for the 5-day free training tutorial, and save yourself a spot, because I promise you it's going to be a banger. What we're going to be doing in this video is going back to the absolute basics of technical analysis, and I'll show you how every other concept you've heard about are linked to the basics of technical analysis. So when we talk about the basics of technical analysis, what are we really talking about? All right, we are talking about support and resistance. Those are the foundation and those are the most basic form of analysis, and they absolutely work. All right, but to know what support work, to know what resistance work, that is where you need to use this concept that I told you about, which we have covered in our premium VIP courses. All right, so basically you might have come across something like a fair value gap or an inversion fair value gap, a new week opening gap, an order block, a mitigation block, and all those stuff. And I'm going to reveal to you why all of those concepts are still related to basic support and resistance, and how you can blend each of these concepts together and actually make your analysis so smooth without overcomplicating it. All right, so for example, if we are to carry out top-down analysis on this particular chart, all right, we know that basic thing we want to do first is to understand the trend of the market, and that is by looking at a higher time frame. All right, so if we go into a higher time frame like the weekly, the monthly, or the daily chart, it generally tells us the direction of the market. Now once we have that figured out, we can now go into the lower time frame and look to trade in alignment with the higher time frame direction. Or sometimes we can also counter trend, but it needs to be something we basically are aware of. All right, we need to know the levels we are trading from, and we need to know the levels we are trading off from. All right, so that is by the way. So if we go back to the real basics of support and resistance, we know that each old high is actually acting as resistance and each old low is acting as support. But what low would you be looking at and what high would you be looking at? Do you just pick out a random high or do you just pick out a random low? No, we don't do that. And that is why we need a higher time frame, and we also need most of the smart money concepts to actually identify what support and what resistance we are going to be working with. All right, so basically, when I pick my support and resistance level, I always pick them from one, the weekly chart, and two, the daily chart. All right, why do I do this? It is because there is more than enough liquidity that rests above daily highs and lows, and also weekly highs and lows. And you can see that every time price peers into an old daily high, it actually reacts from there and moves lower. And this is basically what we know as a resistance. All right, you can see that there is no difference between this high and resistance. But now the concept of liquidity has made us to understand that because there is liquidity resting above this high, we want to see a slight pop to take out that liquidity that is resting above this high and then move lower. This is also a form of resistance. So there is no difference between your liquidity pools and support and resistance. They are basically the same thing. The only difference is you need to understand when price needs to take out liquidity and when price is not likely to take out liquidity, because sometimes we do not always see price come down to the low to take out liquidity before moving higher. All right, that is another topic for another day. All right, to know how you can find whether or not price is going to come down to take a low before going higher, or whether price is just going to react from um, a middle of the range or just from a previous old high that was broken, turn into support and continue moving higher. All those are another topic that we cannot discuss in today's video. All right, but the basic thing here is when we look at highs and lows, liquidity pools, they are also forms of what support and resistance. Now, to prove this to you, once you identify the direction of your higher time frame, like we said earlier, on the weekly chart, we know where price is going to and is moving to. All right, so we should anticipate price moving to this low because we have seen on the weekly chart that price is strongly in a bearish condition. Right, the trend of this market, which is euro versus the United States dollar, is in a strong bearish movement. All right, so we should be looking for price to actually touch this level right here, which is also a support level, and we can see that price has also hit that level right here. So if we take our horizontal ray and put that line here, we can see that price is close to that previous area of support that led to this movement upward. Now, what can we expect? All right, to break this down, to make you understand what I'm talking about, remember I told you earlier that I like to see weekly highs and weekly lows and draw my support and resistance from there, because I know that there is more than enough liquidity that rests below and above these areas. Right, so despite the fact that we are very close to this support level here, and we want to always stay back and watch the price action around this level, we can also take advantage of this smaller movement in the daily chart. Okay, so what we can see right here is that we have this low, which is what a support, and we also have this high right here, which is what a resistance. Now you can see how price dipped into this high and did what? Reacted from it. All right, so since price reacted from this high, we can now go down into the 1 hour time frame and we can basically trade from this high to this low here. And why are we so confident that price is going to drop lower? It is because on the weekly chart we are also bearish, and on the daily chart we have seen that this old high here, which is also a form of resistance, has actually made price displace lower. Right, so basically there are so many ways you can actually enter into this market. When you see your engulfing candle, or when you have 2 to 3 consecutive candles engulfing the last candle that pierced into that resistance area, then you have your change of state of delivery, or what most people call order block. But basically we can also call this an engulfing candle, because if we go into the 4 hour time frame, what you see here is also an engulfing candle, a bearish engulfing candle. And so if you look at this candlestick here right here, you can see that this is the candlestick that actually touched this support level, or rather this resistance level right here, and you can see that it has been engulfed by this next candle. So how do you enter an engulfing candle? You can simply enter right here, right on the open of the next candle, your stop should go to somewhere around that resistance level, and then you should be targeting for what? Your sell side liquidity, or a daily low or a weekly low. All right, so if we have seen that price has reacted from that and we see a 4-hour candle close, right, which is this, you can now go in and trade. But the amazing thing about understanding this concept that we actually talked about in our VIP premium course is that with the aid of that knowledge, you can still refine your entry. Instead of entering on the 4-hour candle upon the close, which is not a bad thing, all right, you can refine your entry by going into the lower time frame, all right, and waiting for price to do what? Touch this consecutive up close candle, which is known as an order block, all right. And instead of your entry to be at this point here, your entry can be at this point here, and you can see how it has reduced your stop, that is your risk that you are taking on this trade, and it has increased the potential rewards that you are going to make on this trade. All right, so this low here would be our first target because this is a daily low. All right, remember what I said earlier: daily highs and low, weekly highs and low. These are the most important level in price action. All right, your 4-hour, your 1-hour highs and low are not really important if they are not in alignment with the daily or the weekly high or low. So that is one important thing you should note from this video. When you're looking at a 1-hour high, you want to know if it's that 1-hour high that actually made the high of that particular day or not. Like for instance, when we look at this 1-hour high here, we can see that this is not really significant. Why? Because this was not the high of the day. So when price broke above that, it did not really give any reaction. But you can see the high of the day we marked out from the daily time frame, and you can see how the reaction price gave of that level. So that is the basic thing you need to understand. Your daily highs and lows, your weekly highs and lows, those are very important levels. And just from trading these levels, I have made over 6 figures, and that is why I'm sharing them with you today, so that you do not overcomplicate your strategy using the fair value gap, inverse fair value gap, or when you're not supposed to use them, right? Not saying that those concepts do not work. They work, but where do they work? They work in alignment with your higher time frame support and resistance, which I have said to be your daily highs and your daily lows, and your weekly highs and your weekly lows. By just identifying your daily high and weekly high and trading from these levels, it gives you the highest probability of making money because that is where the institutions trade from. All right, so you can see how we can actually utilize this trade and trade lower. Now if you took your first profit here, you can actually still wait for this low here because this is another daily low. All right, so you can see that just by taking this trade alone, we have approximately a 1 to 7.4 risk to reward. That is for someone who holds throughout and does not take partial profit here. But that is not advisable because the price can actually do anything. It can react because this is also a daily low. And remember what I said, price will react from higher time frame support and resistance, which are levels like this. So you should be very, very aware of these levels and always take partial profit, especially if you are inside of a trade when price is actually going below daily lows and above daily highs, as this will save you a lot. So if you're one who is interested in learning how to appropriately use this strategy and trade from higher time frame levels, all right, you can actually use the link in the description below. Head on to our website and subscribe to the mentorship program, and I will teach you how to accurately and appropriately trade from higher time frame support and resistance level. Trust me, these concepts are not too complicated like the trading industry makes it to be. They are simple support and resistance that you can understand and actually trade in less than a month or two. Trust me when I say this, you can learn this concept within the interval of 2 months and start making money. Trust me, because they are not overcomplicated. All right, we are not teaching you on how to use the dynamics of whatsoever. All right, it is simple, it is straightforward, it is super effective. So use the link in the description, head on to our website and get that mentorship program, and you'll be on your way to actually seeing the blueprints of how I print money using this strategy in the foreign exchange market. And also do not forget, you can also get massive reward with us at Coinfinity by engaging with the rewards program. All right, so all you need to do is head on to our rewards tab on our website engage with those free educational videos and get yourself a CoinLenity token, of which you can later redeem to gain amazing gifts and rewards like gift vouchers, trading bonuses, and even cash rewards, right? So you can have all these things. You can get all these amazing bonuses if you engage with our free educational videos on our website. So waste no more time, head on to the rewards tab and start earning your rewards. So guys, this brings me to the end of this video. Do not forget, if you're interested in mentorship, you can always get started to learn this basic and straightforward yet super effective strategy from us at CoinLenity. Visit our homepage. If you have any questions, you can drop us a mail at coinlenity@gmail.com or use the link in the description to send us a mail, and we'll get right back to you. Until I come your way again, trade well and trade safe.
Learn and earn with CoinLearnity. Ready to boost your knowledge and get rewarded? With CoinLearnity, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn CoinLearnity tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with CoinLearnity today and make every lesson count.